Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Well, hello there.
Marco, how are you, man?
Good. How are you?
That escalated quickly this morning, huh?
Dude, I was going to ask you, what happened here? Like, what's going on?
What's going on? I don't know what's going on. You tell me what's going on. I think that when you look, what's interesting is I was looking at the way it was going down in the morning. It's almost like a computer was on it. It was very methodical. And I think that from 9:30 in days like that, at 9:30, 10 o'clock, and also at 2:45 to 4 o'clock, the online brokerages, they go through this process of elimination, almost like they go through this process of risk managing their whole book. At the end of the day, they're responsible for the millions of people on their site. So if Robinhood or TD Ameritrade or E-Trade, any one of these, if someone happens to lose a significant amount of money, it could affect, everyone else. And when people are all leveraged up, using a lot of leverage and involved in the top 20, 40 names, you can imagine when the world decides that, no, we're going to reduce, the top 50 names by X billions of dollars. And, you have millions of people that are long these stocks now, millions. You have another 1 million to 3 million that are trading options, long calls. And so you have massive leverage in the system. So you could see how this wasn't it wasn't that big of a move. I mean, we're talking about the market was down 1%, 1.5%. The other stocks are starting to get drilled. Tesla was getting drilled. Apple was getting drilled. We've talked about some of that, the leaders. But this is a warm up. This is like a warm up for what could really happen. That doesn't scare me. I mean, I was looking at it going, I see, things are getting thrown out the window, but they're getting thrown out the window because to me, it appears that the online brokerages were managing risk. You could see probably apps don't work as fast. You can't trade that fast because they're not allowing it to happen. I believe that part of their risk management is to slow the system, press the pause button for a second and say, we need to get everything in order and make sure that people aren't blowing up where we're going to lose money. Because if John Smith blows up because of leverage, the call it Robinhood owes the money or has to go get the money from John Smith. John Smith may not have any more money. And so, they want to make sure that that's not happening. So leverage is not only a powerful thing for the individual, it's a powerful thing for the brokerages that that are giving it to its constituents. I think that they blew people out. It looks like they blew people out. And frankly, that's where these hedge funds, call it high frequency trading funds, like I said, that's where they make a lot of money because, TD Ameritrade is sending a basket. They're accumulating all the shares. Maybe let's just talk on one stock. Maybe it's all Apple. Maybe it's all Pinterest. And they're just saying, we have 250,000 Pinterest for sale at the market because TD Ameritrade is not trying to say it's TD Ameritrade, Robin. They're not trying to trade. They're not trying to trade anyone's position. They're really aggregating everything and they're just saying in one shot, sell it, 250,000 shares, boom. And you're not going to get a good price. Citadel's going to say 250,000 shares when the whole market looks like a free fall. Everybody's like starting to sell and they're going to say, boom, I saw Pinterest trade down. It was down like $10 at one point. It was crazy. And so these are things that happen. So you understand what could happen. But when I tell you that is nothing, that's nothing compared to what could really happen. You know what could really happen? You see how CCIV is trading? What did we say yesterday?
Yes.
CCIV, the things that,
Takes
trade
them
up.
out.
We got the announcement. They're telling you, they telegraphed the announcement's coming tomorrow. And yes, we're bringing in this new company. Well, I mean, think about what we were saying. It's buy the rumor, sell the news.
Right.
I'm going to show you something else in CCIV where, in general, in normal situations, volatility goes up if a market tanks. So a stock tanks and volatilities usually go up. Okay. In these momentum names, sometimes you're seeing the flip side, the opposite. Okay. CCIV tanks because the news is now out that yes, it's happening. It tanks and the volatility also tanks. Why? Supply demand. Everybody's long calls and they're getting drilled all at once, right? So you go from literally $60 to trading 37, $35. Like, these are massive moves and it wipes out massive amounts, billions of dollars. You're talking about a company that was worth $13 billion and now it's only worth $6.5, $7 billion. These are billions of dollars. So you have massive amounts of individuals that are holding 5 shares, 10 shares, but in aggregate, you're wiping out a lot of people. And so these are the things that I tell people, you got to be really careful. And look, if you believe in CCIV and you're going to hold it forever and you're really going to hold it forever, then okay, fine. You're going to have to live with, that's why it trades 250 vol, 300 vol, 400 vol. But I always think in some of these names, there's some common sense. Don't get caught up with this because the stock is going up. It's actually valued at $13 billion. Like, don't get caught up in that. You got a good run. We've caught it at 16, $17. We're looking at this thing. We're talking about stocks versus options at 16.7. It's in the video. And it shoots up to 60. And there you go. What more do you want? It's not like you can get 400% returns on a stock, 300% returns on a stock in 8 weeks. It's not normal. Okay. So you have to act. And, I obviously don't tell anybody what to do. Everybody's a big boy, big girl. They're playing the game. I advise, I just say, this is what I would take I would have been gone at 40. The reality is I wouldn't 30. I would have been taking off all the way up, letting the last speed run. The minute I see a Bloomberg thing that says they're doing this tomorrow, I know that people have been waiting for that. And it's going to click in their mind that it happened. And now I'm going to sell. Everybody, it's going to click in the mind for everyone. So you want to get there before everybody does that. So you not only lose, you have calls. You not only lose on the stock direction, you also lose on the volatility. So that's what's going on this morning. A lot of things, it seemed it was just a basket and it was being drilled and it was just like sell at the end. And now we bounced and we're trying to go back down to, again, should the market be down probably about 1%? Yeah, it's just 1% at the end of the day. It's just 1%. The real move hasn't happened. This is nothing. This is nothing. Trust me. Tesla, people are saying, oh, 675, maybe it's a good buy. I mean, remember we were talking in November when the thing was going into S&P, it was 400 when it started. It went up because there was so much demand and whatnot up to 800. You got to be careful. Why can't the stock be 400 again? It still would be. It still might be considered overvalued on a fundamental basis. If people look at it, so you got to be careful. Someone on one of the YouTube videos, he said he wanted to short. Talk about this maybe later, but we wanted to short puts in Tesla, and then if he got put into the trade, he was going to sell calls. And this is here. It's a week and a half later, and this is how you start, you should think about paper trade. What would have happened? It would have been a disaster. And now you're stuck thinking, now what? So we can go through the math to show people why selling calls, overriding calls is tricky. And selling calls is tricky because you're doing the wrong thing. So go ahead.
So before we jump into Tesla, I want to tell you about the SPYs you send out, SPY puts.
Yeah.
In my experience, so what I had. So initially you sent out the 380, 365 put spread.
Yes.
And he's been losing. I only had one because I never
played
spreads before. Yeah, I never played spreads before, so I was thinking, let me just keep this one. It's the only backup I have here.
Right.
So I was letting it
But you
run.
kept
It
it,
was
but
losing.
you didn't keep it just because of that. Because I remember a couple of days ago we were talking offline, and you said, "Yeah, I still had it." I asked you, "Why do you still have it?" You gave me a good response. It was if you didn't give me a good response, I would have told you sell it. Just sell the thing. There's nothing wrong with selling something that's losing. Just sell it. But you gave me a good response. You said, "I don't have any puts, and I just want this just in case." I can't
Right.
argue with that logic, and that's great logic. So that's why So when you kept it, I didn't say, "Margo, just sell the thing," because your answer was good. So go ahead.
And then you sent out another one, and it was a different spread. It was closer, so 390,
Yeah.
370. And then I figured, look, this one 390, 370 has a more higher chance of winning. If it goes down, the one I currently have is probably going to break even, and that's when I want to get out and just keep this one. So that's what I did this morning. Actually, last night we were talking, and you said, this might go down. Make sure you pay
I
attention in
told
the
you
morning.
exactly what happened. I
And
told you
exactly what
exactly what
happened. You
was going to
said
happen.
get at break even, then
I
just
said,
keep this one.
tomorrow,
Yep.
you're going to have a split second chance.
Mm-hmm.
I want you to be prepared that there's a chance. Just we were talking about it on a podcast, but I just reminded you, you have that position. I want you to make sure, don't wait for that one. That one's March 1st. It's Monday. Don't wait for that one too long. You're going to get a chance, and you might get it tomorrow morning at 9:45, before 10 o'clock, I said. And the reason why I thought was because of what we were seeing yesterday, the action, the price action, the leaders are getting killed. And then what the market does is the market's evil, right? It actually pushes it up all day so that everybody who's long puts yesterday and was probably thinking this market's going to tank, and we're day trading this thing and just buying, they got killed because the market just gradually went up.
Yes.
And it, sure enough, right at the end of the day, it actually comes back down. And I told you at the end of it, because of that end of the day, I said, you see, they trapped people. You see how they slowly went up and then it dropped down very quickly, blew through the stop signs on the strikes. Okay. And it ended up near almost the lows of the day. And I said to you, this could get really ugly in the morning, really ugly. And you should be prepared, because if it hits I told you, if it hits 380, 380 and a half, 381, like your spread, that 80.65 is going to get back to, you were down 70% on it, maybe 80% probably at one point, but you still had it and whatnot. So that spread got right back probably today. Did you sell it?
Yeah, break even.
Oh, you did. You break even. Good. So like that you did a great job. Just like I was hoping, because in those things, sometimes you get a split second to kind of like think, and you start thinking before you see what happens. All of a sudden there's a bid and it shoots up $2-3, and that put spread would get chopped in half in a second because there's only 3 more days. Right. So you did the right thing there. But the reason you kept it on, and I didn't tell you to sell it before, was because you said the right answer. I don't have any puts on, and that was the right answer, and that's why I said that's fair. That's totally fair. So yeah, I mean, look, you played it well. Look, today, the March 12 puts, they traded at 100%, maybe a little bit higher, right around there, and if you get the chance, you take 1/3 off. And I asked you if you took the 1/3 off, you didn't, and you said it's still the only put I have, and I'm trying to manage the other ones. And I understand there's, at that moment, it's a fast game, and people should understand that it can become a very fast game where you don't have the ability to get out. Now, you probably were trying to get out of some of the other calls, that lingering calls that you had on, and you should. And in those situations, the put is there to help you, as the rest of the book is like, you're seeing things come off and you're saying, okay, get out of that one, get out of this one, get out of this one. It's about, the put is there. You leave the put. You leave. If you missed the 100% put, that's fine, as long as you got some of these things that as they were going down. I have no problem with that. I would say that you might want to put a stop loss on, not a stop loss. I don't like the stop losses on things. A limit sell on that put spread to say, hey, get me out of this at whatever, 7.5 or 760 or whatever it is, that way you're not worried, because you're doing so much in 15-minute time period to say, I got these 3 calls to sell, and you're trying to fight to get the right bid. You want to leave, because of course the market makers in that time, what do? Citadel would break even on normal days just to live during those days of volatility, because
Mhm.
when people are making a mistake and blowing things out, hitting the bid when it's a dollar wide, that's where they clean up on those days.
Yeah.
Right. And so look, you're doing the right thing. I'm happy that you got out of the March 1st one. You took that back at flat, and now you have the 90-70, which I still think could be a home run. I don't think the market is, out of the woods. We've talked about very specifically, I talked about this step down, right? It's going to step down. And then what happens is today you're seeing a lot of people buy puts. When everybody's getting long these puts, waiting for the next leg down, the market doesn't want to give you that next leg down.
Right.
So you got to be careful. It's not going to want to give it to you, right? What it's going to want to do is make you feel some pain, right? And make you feel, people just think, oh, the market crash is going to go down, straight arrow.
Right.
It's going to make you feel some pain. So it goes down, and then, there was open interest. I've shown here on the podcast over the last couple weeks, there's open interest in this week, the 85s, the 385 level, that there's a decent size, 60,000, decent size, and also in the 80s. Well, when you clear, we've now stepped down. So now if you want to go past this week, how expensive are those puts? They've become very expensive. Do you think anybody wants to buy them? No, they don't want to buy them. And then the people who do buy them, they have to spend double the amount of money to get the same puts that they could have got last week at a cheap cost. So this is why we had someone ask the question, forget who it was, last week, about buying puts. You have to buy them when they're not expensive, which can be painful. And I'm in the process, I think on Friday, because we're not online, I'm going to put a S&P video and show you our SPY puts over the last 18 months. So I'm just going to take the day we put out the SPY ideas and graph them over 18 months to show you what we were doing and give you some perspective on what we're trying to accomplish, and how we're trying to hedge, and how we're trying. I don't think about it as throwing away money. I'm trying to hedge to make money too. I want to make money on these things when they come down. And I think it'll be interesting to see every put idea I gave over the last 18 months and sort of how it played out. Win or lose, this is what probably happened and what should have happened. So, look, in a day like today, I'm telling you that this is nothing compared to what will ultimately happen when things go down. And this market will be evil on the way down. That's how momentum is all fun and great on the way up, right? Because you're just buying those dips and it goes up $10. You buy the dip, goes up $20. Buy the dip, it goes up $100. It's very fun. Okay. I'm going to tell you, it's not so fun on the way down, because it's a psychology game on the way down. It goes down a big CCIV goes down $20 first. And then what happens? Whoa, that hurts. Okay. On the next bump up, I'm going to buy a little bit more. On the next bump up, I'm going to sell some stock. Okay. Well, the next bump up is not $20. It goes up $6. And you're like, oh, this is great. I'm getting ready. And then all of a sudden it drops 10. And now you're thinking, okay, now should I buy some more? What do I do? I got some calls and nothing's working. And you buy a little bit more because, of course, you're supposed to buy the dip. And then it goes up, not $10. It goes up only to $3 to where the low was on the previous downdraft. So you're not even there yet, but you're kind of excited because you're getting back. And then it drops another $15 or whatever. That's how momentum works. And it's evil. And it may happen over 5-6 months, but it's evil. Go look at the NASDAQ. People think the NASDAQ crash happened overnight. It was like the 1999 bubble. You look at a chart over 10 years and you're like, you know what? There it was. And look, it came right back down. It took a year. It took a year to actually, the first 6 months, it was bad. It was like 30-40%, but it was choppy. It was down, up, down, choppy. Then it got to a point where it literally dropped 85% to all the way down to the lows. And that process went straight down for about a year. So it did this up and down dance. It got people back in, and then it crashed. And it was a slow crash. These things is like slow train wrecks. That is the worst, because that is how people lose an enormous amount of money. So you just always got to be aware of where you are on this mountain and how this mountain tends to play out. Not that everyone is the same, but they tend to play out fairly similar. Okay?
Cool.
Good.
Yep. Nice.
Why don't we look at, let's talk about the Tesla, because the Tesla leads us into the lead, the NEOs, the XPEVs. Remember, the lead horse. I keep saying it's in a momentum game. You're looking at that lead horse. That lead horse is Tesla. Tesla is trading at 30 times sales. when it gets cut in half, it's going to trade 15 times sales. And if the story for every other EV name is Tesla's trading 30, so we should trade 40, 50, and there's this, we're China and we're going to be bigger. That's where you get into trouble, because if Tesla gets cut in half, these names might get cut by 60, 70%.
Yeah.
So let's look at that. We can look at today. Let's see. We saw the CCIV. I think it's just good to show you that all these volatilities, we were looking last week, there were 300, some of these, 250 to 400 some days. And today they're all back to 150. So how does Citadel make their money? All those people that bought when it was 200 vol, they just got annihilated. Okay. Not only that, but then the bid offer gets wider with when you're trading these names on the way down, and they move the bids, you're getting killed both ways. Okay. So 3 ways. You're getting killed on the direction, you're getting killed on the widening of bid offers, and you're getting killed on the implied volatility. Okay. That's how Citadel makes money. Okay. On the, people think, oh, they just make their penny, 2 pennies. Right. No, they do that. They do that, but then they do what they're doing here, the game they're playing here, which is you could just see how massive these moves are in implied volatility. This was 250 to 300 last week. Now it's 140. It's massive. Wow. The further you go out in volatility, like, in August, further you go out in expirations, July, August, January, the more these numbers mean, the more they mean. Okay. So that's something to just keep in mind. People ask, how do they make money? Yeah. Let's look at we're going to talk about Las Vegas Sands. Makes me cry. Okay.
Lee.
Which one? Lee. Yeah, let's talk about the Lee, because we saw something here. So Lee. Okay, let's just look at Lee. Let's look at. We're going to look at the daily. We're going to look at Lee. All right. We talked about that line, right? What's the line? I think we've been talking about this the last couple of days. What's the one line in Lee? I'll give you one shot. Tell me the one line in Lee that you think is important.
29.
29. Okay.
30.
So let's start with the 29. Okay, we can start with 20. That's your important line. I'm going to look at this one, which is 27. But 29 is not bad, because it's sort of like right in there. You're sort of here too at the top. So let's just call it 27.29. Okay. 27.29. And let's look at how this gap lower here, and all of a sudden where it was rejected. It was rejected at 27. Okay. That's the line I'm looking at, because it's an important line. We had a lot of volume here and here. See this volume? This volume?
Yes.
Okay. That's on the gap, and that's on this move high. A lot of volume. Then it went all the way up, stopped here, came down a little bit back to 29, but eventually found this level again and immediately shot back up. Not a lot of volume, which is a little bit of a sign that it's not as strong as you would want it. But here there was some volume here. Okay, so it shoots back up, comes back down, and it's this 27. Today it gaps. It gaps. This is the level 27 you're playing against now. It's the wrong side of, what are we going to call this? This is the wrong side of the moat. We have the mountain. Now it's the wrong side of the moat. Like you're underneath here. You're underneath where everyone, all these people from here to here, there's been a lot of buying and selling action here. There's what's left. There's people that are left holding Lee up at these levels. Well, now they're underwater. Okay, they're underwater. This is, let's call that the current. I don't know. We'll figure something out for that name. But they're underwater here, and they're trying to get this back. But the selling here, this becomes resistance. And what's the next line under here? Well, here's one, sort of this level. You see that?
Yeah.
And let's see what that is. And you could see, by the way, you should be doing this with stocks that you look at all the time, just to know, right? We don't have to wait till it actually happens to know that this was the level 27, to know that these are important levels right here, where it's the close and the lows here, breakout here, then the lows. So you got 23. What's another level? The next level I would say is somewhere down here, which is about 14 and a half. Yeah. Okay. So these are kind of what I see as levels to look at. You break 23 and you're in trouble here, because again, this volume is all up here. That volume, yes, it's probably some of it's getting out, but there's people holding stock here. Okay, so
Mhm.
now that we see that, I'm looking at, okay, break at 23. Geez, can we get to 15? Why not? Why not? There's no way you're going to tell me why not. I'll also say 47 to 27 is how much?
20,
20. 20 from 37 is how much?
17. Yep.
Okay, so remember what I'm talking about here. Okay, this is, what do you call these? A, B, C, D, Elliott waves. Okay,
Mhm.
so if you want to look at Elliott waves, these are, I think they're great to at least understand at a high level, Elliott
Yep.
waves. Okay, so there's my plug for Elliott waves. Have fun. 17. So now that we framed it, this is my frame. This is how I look at the world. I haven't even looked at options. This is how I look at the world. Okay, now we go back to the options market and we look at LI, this auto, and we know it's an EV, Chinese EV. It's down 8%. It's down because the lead horse is down. Tesla's down. What are we looking at here?
March.
So some March. I see these Junes too. When there's big volume in the longer data options, it actually intrigues me. And what I see there is 5,000 here and maybe something here. So maybe it looks like someone is actually buying these 25s and selling these. Maybe that's what it might look like here a little bit. But
Okay.
we'll take a look at that. But well, let's look at the Marches. And in the Marches, we see the 20s. Open interest here is 12,000. So it's a little, I'm not going to be completely sure without going back historically and sort of seeing where has this traded, but let's just see the 20s. The 20s traded in a 952 range here. Looks like 103. Okay, so this was a buy. So somebody was buying 5,000 of these things in the 20s. I don't think it's a terrible purchase because if this thing breaks 23, right? If this thing breaks 23, look at the RR dollar here, 17 and a half.
Yep.
That's what they're looking at. They're looking at exactly what we just framed out. They're buying the 20s at a cheap cost because if it breaks this 20, and they probably bought it. Look, they bought it when the stock was 24, right? They bought it right here. So let's look at where's Lee? Where's this here? So they bought it at 71 cents. Stock was trading 25.20. Okay, so we're here. Stock was trading 25.20. So let's move this up to here. Stock was here and they paid 70 cents for this, thinking that 70 cents can get them somewhere down. If they paid 70 cents with the stock there, it was probably closer to like 16. It's 15 and a half, which gets us to 14 and gets us to the levels that we're looking at, 17 to 14.
Right.
Is that fair?
Yep. You
understand?
Yes.
Capiche?
Good.
I want you to see, that, once you understand what we're doing here, which is, again, call this a frame. This is like the blueprint of the stock. This is the brain of the stock. And we're trying to use very simple, some people literally you look at things, have this, and then it goes like this. And they're like, this is definitely going down. Don't you see? You see what's happening? It's definitely, Lee is definitely going down. That's what people send me that. And they say, can't you see the pattern? I mean, it's so simple. I mean, it's like right there. Look at all the lines. It's like,
Right.
Please stop. Simple lines. Let the eye see it. Very simple. And I'm training you to do that. And we're practicing even offline. I, force you, show me that one line. Show me that one line that tells the whole story. Right. The next one, let's look at. So, I mean, we can go through all these, the Neo, the Lee, they're all going to be approximately the same. So let's just leave it there for now.
Let's look at the back to normals, the opposite.
The recovery names, right?
Yeah.
That's why I don't stop looking at. I can't stop looking at this stock either. It drives me insane. Drives me insane. It's like I was gonna say something, but I was like, it's like the stock that got away. That feels like it just feels. Hopefully Rudy's still in there. Where's Rudy? He was in there yesterday. Please, Rudy, I'm living vicariously through you. This stock is, after 300%, just take some profits. But gosh, this stock is still going. But we got to get Rudy. Rudy will hear this and he'll send me an email. These coming back to, going back to normal stocks are trading well. Two stocks I'm crying about. Okay, two stocks.
Oh yeah.
You know, these stocks, we were waiting for this. We thought the vaccines were going to actually make this a lot faster, make this move a lot faster. And these stocks are trading very, very well now and look very good. We also talked about names.
Rudy sold.
Rudy sold.
Yeah, he sold. Yeah.
That's all right, Rudy. 300. No, you're not going to get any. You're in the same boat as everybody else. You're not going to get any sympathy for selling 350% gains. Visa up $3. We talked about that. Mastercard. So all of these, Mastercard seeing a little bit more volume than Visa, but you're seeing these are decent size, buys here. People shuffling, getting in. Mastercard, Visa. The charts look, in my opinion, they look pretty damn good. And I like the idea that Melvin Capital is in the names. Okay, so this is Visa on a weekly chart.
Can you inspect it too? Yeah.
Yep. Sorry. This is Visa on a weekly chart. Long move this, but you got a digestion here. It might take a little bit of time. Maybe it's the next earnings, and we need a good market. But you have this sort of digestion of. Let's go here. This is sort of a big move, right? And this was a big. Why it stopped there? I always ask the question: why did it stop there? Like, why there? So that's nobody knows the answer, but I think you could just sort of flag it as a level of this stock is moving in a nice way. So my frame looks something like this, and if it breaks 215, with volume, I want it with volume. Give me 215 with volume, and this thing could rocket. It could actually rocket. I think it can move a lot. So I like it. I get more confidence when I see Melvin come in and put his whole, he's moving his whole stack. Look, the guy, I'll always say it. He got beat on one, but the guy moves his positions around and he's like, we're betting here. And he's right a lot more than he's wrong. I'll tell you that much. And so this is, he's betting on this trillions of dollars on the side that Dan Loeb mentioned as well in his article. And he's betting on this potential recovery, or at least the opening up where people spend. And maybe on that initial spend, then he blows out of it in September because he starts when the things actually go up, maybe he starts reducing his positions then, right. So that's Visa. MasterCard looks very similar. We are seeing, I think we saw something today in SABR. Okay, so let's look at SABR. Remember, he's long Expedia, right, Melvin? So SABR started picking up on Friday. Maybe that's him too. Who knows? But they have earnings coming out this week. And on this SABR, we have 10,000 of the 15s and 7,000, 8,000. This has been growing here. So this SABR in July, let's see what happened. I don't know what this was. I'm looking at it right now, but I saw 240.74 vol, huh? So the stock was trading 1441. Those options were going from 250, 249, 240. This actually might have been a sale in SABR. And then they sold the 15 calls to buy the 17s. Same time, 1140. 1140, 1147. It doesn't say a spread here, but that doesn't mean that it wasn't. Sometimes the ticket doesn't get stamped. It's happened at the same time, right around the same time. So I would say they're probably related in SABR. And this one looks like it was 85. Looks more like the 76.3. Let me see what was vol. So 74 on that one. This one was 74. It looks like someone sold this one and bought the other one. 74. Yeah, because it's reversed. The IV is down here, so 74 is lower than the higher one. 70. Hold on. This traded at 74 vol, and this traded at 76. Usually it's opposite. Usually when you buy a call spread, this one is higher and this one is lower. Usually. Okay. Right. Yeah, I'll teach you something very quickly. the at the money options here, the puts and the calls, trade at X volatility. The upside calls usually trade at a lower volatility, and the downside puts usually trade at a higher volatility. Okay, so when you see something, and in this case, a lot of people have been buying calls, so it might be flatter, especially upside might be flatter, meaning the IV here and the IV here are about the same. You have this, you can get an idea from how they trade, the IVs that trade on the spread, and you can get an idea of whether or not it was a buy or sell. So here, this one traded at 74. I would expect if it was a buy, this one would be 72 or something like that, 70 even, 69. But this one was 74 and this one was 76, which means, the person making this market said, I'll buy this here, sell it here. Me making the market is going to give a bid and offer on a volatility basis. That's a good spread for the investment bank. Person wants to get out, you sell the calls. It looks like it also could be that the stock had just had a nice push from 11 to 15. So if we just look at SABR, this is weekly. It's trying to get back to normal. The daily, it's had a good kind of run here over the course of the last 5 days. Not saying it can't run higher, but it feels, and I'm not sure. I'm not 100% sure. It feels like this might have been a sell of a call spread. So if they sold it at, let's just see the prices again, 240 and 180. Is that right? 240 and 185. So that's 55 cents. 55 cents. 145. So less than 3 to 1, 285%. Could have been a buy. It could have been a buy. It just doesn't seem like it traded that way, but we might have gotten, if you get a late print on these spreads, you can't tell. So if you get a late print on the spreads, it becomes very difficult to tell. So I'm not confident. I'm not sure, to be honest. I see this here. I'd like to see what happened here. At 50 cents to make 150 doesn't seem like a bad bet if you're a buyer with the stock trading well, right? I always think about who might sell it, and who with this chart, it doesn't seem like a bad bet to say I'll pay 50 cents to make $1.50 on 1517. So I'm gonna say common sense trumps anything I'm seeing as far as data goes. You understand?
And they're looking at 17 for it to go.
Right, and they're looking right 17, which is you see exactly
right
here,
around that level. Yep.
like this level with the gap. See, you're learning, right? Because you learn to see that the top part here.
Yep.
Okay, so you're looking at that 17, 18 and a half, and okay, if it does make a move, maybe it goes from here to here, 17, 15, and you get 3 to 1. I mean, it doesn't. This has got a decent amount of momentum, so I would say it's a buyer. Even though it looks like a seller, I have a hard time believing somebody would sell a 3 to 1 bet with the stock at 15, with all the recovery stocks going after a large move on big volume. So I see the data. It looks like a sale. Something's telling me, common sense is telling me someone would buy that. Okay. 3 to 1 on a 50-50 shot here with the stock having great volume and momentum starting to build. That's how I would call it. So I would say a call spread. Somebody did that call spread.
Okay.
But I don't know. So I don't know, but I'm going also, we had a lot of buyers on Friday in SABR, and so I think it continues. Okay. All right. What else?
Right, here's a golden nugget I found, and it's Sonos.
Golden nugget, Sonos. Let's see how much of a golden nugget this is.
Let's see.
Golden nugget, Sonos. You know what Sonos is?
I think it's audio stuff, right?
Yeah, they sell stuff. They sell cool stuff. There's cool lamp. I think it's like audio and lamps, audio and like figures. It's cool. We were involved in this name. People thought it was nuts. We were over here. I think it was last year, maybe around here. Might have even been further back. And let's go. It's like perfect for Apple. You would think they have they got some. I think it might have been somewhere around here. We were looking right around here, so we got long here, and it didn't work out. And then it went from 8, and the story eventually played out. So this one I know because they have agreement with IKEA, and going into December Christmas, it looked good. I mean, the chart looked good. It looked great. They were buying calls. Smart money guys were getting in, and didn't pan out here. And then eventually just boom, took off. Okay, so Sonos, they definitely these cool looking stereo equipments that go into your lamp or the little fixtures. They sell them in IKEA, but they're also expensive. They sell another online as well. Let's take a look. And what do you see? Calls or puts?
I see
Puts?
calls.
Calls.
Yeah, it looks like reaching a little bit, but
A little bit, just a little bit. It looks like
yes.
it's reaching just a little bit.
Yeah.
I mean, I don't know. It looks reaching. It feels reaching. This market feels like it's a different type of market. Over the last few days, it's trying to go from momentum to show me the money. I would say Sonos. Which ones are you looking at? I mean, there's nothing to frame here, right? It's just this is on one side of the mountain here, and it very well could be. Here's a perfect one, right? Let's look at. This is a good one. Let's frame it first, so we understand, right? Because we've talked about here framing things. Okay, so we have. Is there anything before this? I think that might be it. It was IPO'd.
2019 was 18.
Okay, yeah, here we go. Okay, so what is the? Let's just try to do what we do. Okay, give me one line. What would you do? What would you say? One line. What's your important line?
10 or 16, 17.
10. Well, okay, this looks good. How about 10? All right, good. I like that. I would say, I would have said my most important would have been this one right here. But this is a close second. So we have 10 here. We have sort of this here. 17, right? And then after that, we have the IPO day, the high, right? We have that day. Okay. So we have 10, 17, 24. See a pattern there or no?
777, yeah.
Yeah, there you go. 7, 7. Okay. Then it just takes off. Okay. And this is, clearly a moonshot. Okay. It appears to be, we're on the left side of the mountain here, you could say. Okay. You definitely could say we're on the left side of the mountain, and nobody knows where this thing stops. I'm not going to tell you where this thing stops. We're seeing people buy calls here. Buying calls, selling stock would make sense to me. Common sense. If someone's long this and been long it for, remember November, this was $16, $17. Now they had a good Christmas season. I'm sure they've sold a lot, and they're going to, people just extrapolating that to mean they're going to keep selling forever. So which one? So this is how I would frame it. I would say that, let's look at sorry. How do I get out of here? Yeah. It looks like something's going on there. Let's look at daily just to see. And we see that it looked like it came down today. This is a gap. These are short-term, 34, 33 is a gap, and 28, 27 is a gap. So these are my levels, 34, 23, 29, 28. That's what I'm looking at on the downside. This rejection was pretty strong. I mean, you see how it gaps, it comes down here, they reject it. Today, it trades straight down. They reject it and they buy it back. It's pretty damn bullish. I mean, so, I'm not poo-pooing the thing, but I'm simply saying, damn, it's after a run like that, and they're still buying calls. And aren't they buying calls? Look at that, 18,000 calls. Push vol a little bit here, stock up. Yeah, I mean, they came in to buy it, right? They came in like a lot of stocks, but this one was again at that same level that they like it there. It comes here and it holds. So this is pretty good. It looks like they're buying calls all day.
Yep.
Buying calls all day. I think I know who the buyer is there, but so they're buying it all day, and vol is trading up. And what are we thinking? If we're going to buy these 45s at 3.5,
62.
Let's go to 60, as I say, 63. There you go, 62, 63. 467. Okay, so somewhere between 62, 63, 67, 61. Okay, so maybe 63. 63. Wow,
Yeah, it's a high move.
that's high. So 63 is 400%. I would reduce this down. I'd take the liberty to reduce it down to 61. 61 gets me 350. Even 60 gets me. I'm just still. I'm trumping because with the higher volatilities. Remember, as volatilities go up, these in the money probabilities that come from black shoals, they go down a little bit. So I start going from using this to using the actual, like how much I could actually make if I'm paying 350 for the 45 calls and my break even is 48 and a half. So I need this stock to move a significant amount just to make my break even, right? But now we're doing a risk reward break even, which is somewhere up here, using this as the black shoals, and this is going to be fairly close, 27% on the 45s. So it's got to be up there. It's you're talking about a 3-to-1 play, 3-to-1 play. 25%, 25% is 3-to-1. So I multiply this by 4. 3.5 times 4 is 12 plus 2 is 14. So 45 plus 14 gets me about 59. So I did that math in my head here, but 26 is going to get you this. And then I don't have 100% confidence. Okay. So I got to reduce that a little bit to probably around 75, 80, somewhere around here. And you can see the pointers leading me to a different option. So yeah, I mean, you got to be thinking close to that 62, to make some money here. Can it get to 62? Jeez, that's a moonshot.
Yeah.
62. I don't know. At that point, I would look to see, when someone's doing that, I would look to see the fundamentals again and say, show me the fundamentals. We're not going to do it here, but I would say, show me how, so, because this happens a lot. So this is what I would do. I would say, show me how much SONO is worth today.
Mhm.
So it's worth $4.5 billion. And then tell me how it's going to be worth at
Eight.
263. 263. Tell me how it's going to be worth, $8 billion. That's what I want to know. How is it going to be worth $8.5 billion? Tell me that, explain that to me, and then and that's what I want. So I would go to the earnings transcript. I'm going to read the earnings transcript. I'm going to hear the CEO saying to me, we're going to sell through Apple or whatever. We made a partnership, or I don't know. I don't know what the news is, but maybe something has transpired, and that maybe maybe it was a regional thing with IKEA, and now it's national. And it's been blowing out, the regional numbers and national. It should be just as good. But I gotta start thinking, how is this stock gonna go up by another, let's call it $4 billion, $3.5 billion over the next, what are we doing? March, June, over the next 4 or 5 months. If you can explain that to me, I'm in. I'm looking at it. I want to see it. I want to, I'm gonna. We've did the mapping out. We understand what they're doing. Now you got to tell me why. What does somebody know? What are they thinking? Why are they thinking that? Otherwise, I'm going to start thinking what the person is doing is buying those calls and selling out of stock. Okay. That's how the thinking goes. That's how the logic goes. Right. If I can't prove to myself that there's something exciting here, this is going to go to 65, then it's nothing wrong with someone taking some profit here, selling, and then just buying calls and then just moving on with their life, right? You've just taken $30 out of the stock in the last year, right? In the last year, you've taken $30 out of stock, or in the last 2.5 months, you've taken out 16. You've got to double. Why not just take out of the $16 move up, take $3, 3.5, put it in there for June, and then walk away?
Right.
Does that make sense?
Yeah, that was my second.
That's what we're trying to balance. That's what we're trying to balance. What else are we seeing?
I've seen some put mixing in BA. I don't know if it's reshuffling or changing positions. BA, yeah, Boeing.
Just look quickly here. So they had the plane debacle over the last couple of days. Let's look at what Boeing is doing here.
Just increase your screen a little bit. Just
Yep. Sorry.
make it taller. Yep.
All right. Here we go.
Cool.
Sorry. Okay, Boeing down 370, 1.74. Boom. Oh, I see the March. What are they doing? Puts?
Yes, puts. 220, 217, 210, 25.
I mean, just looking at it, what it looks like is someone just see 9,000 and 12,000. So someone is looking at, someone probably bought this. I would suspect they bought the 9,000 here and sold 9,000 there, or 8,000, whatever it is. So they bought 220, 210, the 210, 220 put spread. They bought this, and today they're selling this, and they're buying the 217 and a half, 205. I don't know why somebody would do that, but they're just rolling it down a little bit, maybe taking a little bit. I don't even know if they're taking money off here. $7 and $5. No, $7 and $7. I don't know. It doesn't really make that much sense, but if this was my client, I would tell them just not to do that. But it's not my client, so they can do whatever they want. But it looks like someone is just rolling down. But to roll down $2.50 for, I don't know, it seems they're getting a little, it looks like they're getting a little more, right? 205 and 217 and a half is $12.50. This was only 10. So with the stock trading at 209 here, they're simply rolling it down to try to get more out of it. But I think it's like they're probably doing that for only you can only make a couple more bucks more than you had up here because you got to pay out of it. So for a couple of bucks, is it worth it? Is it worth the hassle? Probably not. I don't know. Unless they know that the stock is going lower, which in that case, then it is, right? So if, on a risk reward basis, on a one-to-one, it's like such a small amount to start shifting so much that unless they think that it's actually worth it because they're selling stock and the stock is going to trade 200, right? Then, so same thing. You remember with the QuantumScape, with all of these names, when we see it, it's because, why would they do that trade? They would do that trade because why? They would do that trade because they're going to be selling, so they know. So it might look like a flip of a coin, but the reality is that that they're gonna be selling. We saw it in Blink here, and they were targeting 35, so they were doing that trade up here, 55. They were buying the 45. I think it was a 50-35 put spread, and we said that they were targeting 35. Where did it hit today? 33. There you go. Nice. Right. So these trades, sometimes it's not that they make so much sense, but it shows you that it's likely that someone big is actually actively selling the stock and this, what I see when I see that. Okay, so sorry, so much stuff goes through my head. Sometimes it's hard to get everything exactly the way I want to express it. But, and this is the nuances, because people always ask me, well, how about this one? Or why not that one? Or why this one? Or why are you thinking that? So when I see something like that, that triggers to me that it doesn't really make so much sense to do that trade unless someone really knew that they were going to make that extra few dollars, right? Which means that they would have to be selling the stock down towards the 200 level. And if they started selling the stock down to 200 level, okay, what I do see is I see a stock that was trying to do, I see a stock that was bullish and trying to do this, right? But if somehow this stock gets to here, this gets broken and this starts becoming, right? This, take this out because it starts breaking. This becomes something that looks more like, and I'm going off the page, it would look more like, that, but it goes off the page, which probably leads me more towards maybe the 180, 170 level. You understand? Yeah. So that's technical analysis and how, just because you see something on day one, and it looks good. And I'm thinking here, right, this to this, and we're talking positive. And then all of a sudden you start getting something that's developing. And then if it trades 190, this is not going to look the same. You're going to start have to focusing on this downdraft where it would look like this. So it's about being a little creative and sort of seeing what you're seeing, and making the options flow tell you where they think it's going. And then once it goes there, I look at the chart as if it happened, and I see, now what does it look like? Here it doesn't look anymore. It doesn't look as bullish anymore. It actually looks like it could break this line if it starts going down, and then you're in trouble because you got a gap here. You have a gap here to worry about. And I would say, damn, 160 starts looking like the where it wants to go again. So this is how technical analysis, shifts, and how you have to sort of shift with what's going on. So, you like it one day, and then all of a sudden something happens when it shouldn't happen. And, it's not going to look the same. The bullish story on the chart is not going to look the same. And you could then start looking and refocusing at 160. So these things are constantly moving. It's a moving dynamic, if you will. And we're just simply trying to make sense of it as it's happening.
Okay.
Good.
Great.
Any questions from any of your
we
friends?
got a good one from Bharat, and it's ARK 130 puts in March. So ARK is something you predicted might go down, and look what happened today. So
yeah, I mean, look, it's ARK. Let's look ARK. Kathy Wood. Kathy Wood. I give her all the credit in the world. She caught Tesla, but if Tesla trades 400 and this thing goes back and Tesla doesn't reach her 2,500, and she's going to be known for calling that move when nobody wants. So you got to give her credit. This ARK has traded well. Obviously over the last year, it's tripled. The story here was you run this problem with momentum, people getting out. They were buying the 120 puts, right? I think they bought 18,000 of these or something down here. That's a home run trade. And we talked about, again, it's, when guys are trading, we looked at that ARK, and the volatility was only 40 something. And the at the money volatilities were 40 something. And I said to you, I said, that's a brilliant trade. That's a great trade. If I could get 18,000 of those trades on delta neutral, I would do that trade, on a volatility basis, because I'm probably going to lose 5 vol points if nothing happens. But if this thing starts turning, you see that volatility explode, and then the gamma, I'm starting to now get gamma. It's a home run trade, for those people who bought those puts. And the volatility now has gone up significantly from 40. It's up 15, or maybe 20 points in the last couple of days. So that's how as a volatility trader, that's how you make money. As a directional trader, I just thought the same thing. Probably the volatility guy thought, which was, there's money being poured in. We keep talking about this money being poured in. At sometimes it's got to be poured out. People get scared. They start selling, or maybe she's lost her luster. Maybe it's, she didn't invent a new machine that picks great momentum. She just happened to catch Tesla. She was out there saying it across the YouTube channels, and she was right. And people like that, and more money came in. As more money comes in, she's buying smaller momentum names in an environment where momentum was working. We talked about the S&P versus the TLT trade, that spread, that rebalance, and how over the next 6 weeks, you might see some trouble in momentum stocks, simply because there will be potentially a lid with people selling equities. So what are they going to sell? They're going to sell these names that they just made 300%. They're going to sell these names that are high in valuations, and simply say, okay, we made some money. Let's reduce our equities, and we got to get into bonds here.
Right.
One, because we got to get into bonds, but two, how you think about, the risk management of portfolio. So, I think ARK is an interesting. I give her all the credit in the world. She caught the biggest momentum market in history, and she was there with the lead horse that had worked. What's somebody saying? Somebody saying she's looking 5 years out. Yeah, she is.
Yeah.
But I can tell you she has $55 billion in ARK, and I can tell you 40 billion is probably gonna. How about this? 55 billion thinks they're looking 5 years out.
Mhm.
45 billion can't see past 6 months. And when ARK is down from 155, if it trades 90 again, I'll ask the same question. How many people say, "Hey, we think 5 years out, who cares?" People
Right.
care. It's like the same thing. I'll say it again. Mike Tyson. It's like everybody has a plan until you get punched in the face.
Mhm.
So same thing with Bitcoin. Everybody was holding. It went from 3,000 to 20,000.
Yep.
Hold. How many people were holding at 3,000? Like 90% of people left. Then it went from 3 to 55,000, and now people like hold. Well, if Bitcoin actually comes back down to 15,000, right? Which why couldn't it? But if it comes down to 15,000, how many people will hold? I bet you the same thing. There's the whole world thinks they will hold until you get punched in the face. You're about to get knocked out. You're down 80%, and then you're like, maybe I should just save my last 20%. And they sell. It's just human nature. It's very, very difficult to hold. Same thing with GME. How many people held? Well, the people that held are still holding all the way up from 200, 150, 200 on average. Okay. And meanwhile, there's a lot of people in the beginning of the story that they were selling. They were selling at the top. So, everybody's a hold. Everybody's a 5-year thinker. Everybody's Warren Buffett until the market's down 80% and nobody gets it. Everybody gets out. Okay. 90% of people get out. And yeah, there's those 10 people that are going to say, no, you know what? Markets always go up. I'm just going to go down that road every day for the next 30 years. I don't care. Okay. I've seen these crashes go up and down. And let me tell you, when the thing's down 70%, 80%, people care. People care. So that's my 2 cents. That's my 2 cents. What other questions?
I got one more from Brenda actually, and let me just pull it up. Here it is. All right.
Should we be comparing Bitcoin and Tesla charts since Tesla has bought into Bitcoin? It's fair. I would say you can compare Bitcoin to Tesla mainly because they're both momentum stocks, right? They're both this momentum. It's a psychology game. Okay. Behind the scenes, I tell Marco, he'll tell you, I say, every one of these stocks, mark my words, every one of these stocks will see a mountain. And within 18 months from now, people will be asking themselves, how was I paying $80 for this stock? Because you'll probably at some point get them for $8. Okay. And it's just the way it happens. It always happens that, now it could be that every EV stock is going to be worth $500 billion. Maybe I'm completely out of my mind, but that would make the EV market to be, however many trillions. And it just doesn't make sense that every SPAC that comes out is worth 15, $20 billion. Doesn't make sense. It used to be every internet company, every company that built a website, the company shot up by $200 million, literally. Right? Literally. Now you can make a website for $8 with Wix or whatever one of these things. So you can make it literally, I can make a website for $8. Well, 20 years ago in 1999, if you put up a website, your stock jumped by $200 million. Well, today, if you put out a SPAC and you're going to take out some company and bring it into the fold, it's immediately worth $1 billion, $1.5 billion. You're in the game. There's something wrong with that. There's something really wrong. So all of these names, Bitcoin, Tesla, I mean, you name it, any one of these, you can relate them because they're momentum. And momentum looks the same, whatever name you put it in. Okay, so some go up a little bit more, some less, but in general, you got this mountain and it's moving up. And on the downside, it's not pretty and it doesn't feel pretty. It usually, momentum has taken in some of these 3, 4, 5, 6, 7 months. The same way in the down, it could take, a year. It could take 6 months, and then they do this last gasp and come down, or just come straight down. But, any of these names, it doesn't matter. Just, I keep saying this book, read this book, Manias, Panics, and Crashes, A History of Financial Crisis. You will learn what I'm not just making this up. This is historically how it all works. So, I would put some effort into that book and just look. They go from tulips to this. It's all momentum. Some momentum lasts 20 years. Some momentum, lasts 6 months. Some momentum, but at the end of this momentum of this ride comes this fall for whatever reason. for whatever reason. Okay, so keep that in mind when you're comparing. You can compare, I think Tesla to Neo to lead it, stay in your lane, but they're all in this umbrella of big momentum.
Okay.
Okay.
Great.
Awesome. Cool.
Thank you, Felix.
I lost track of time. Where are we? That's it, man. You're done.
All right.
I gotta
Cool.
go. All right. We'll talk tomorrow.
We'll talk tomorrow. Yes.
All right. Be careful out there. Be careful. We talked about this the last thing I'll say is this SPY could actually make another big dump. I think we're okay between 380, 387 somewhere by Friday. I think somewhere around there. But I think what happens is this is the week that we wanted to get past. You get past this week, it becomes a little bit murkier. You have March options that March open interest, which is, there's some decent levels at the decent amount at the 390, 380, 370, but those options are very expensive. And so they have to have it move a lot more to actually make money. So I would say that getting through next week is going to be difficult, but we'll play it by ear. All right. All right.
Thank you, Felix. Thanks, everybody. And make sure you like, subscribe, share. Really appreciate your support. And we'll see you in the next one.
Thank you. Yes. Tell them I really do appreciate everyone. Thank you.
Yes.